Hello friends, welcome to the Block Thrasher daily crypto update, where we are shattering the complexities of crypto with crypto news, commentary, analysis, and education. The million-dollar question everyone is asking is, will the cryptocurrency uptrend, will the Bitcoin price uptrend continue? There is some data that would say that it will. Big whales are not selling, but accumulating Bitcoin. According to data released from Sentiment, big Bitcoin whales have been mostly accumulating Bitcoin, as over 35,000 Bitcoin has left exchanges in the past 30 days. The latest outflows have also pushed down exchanges' reserves to the lowest levels since early March, before Bitcoin hit the new all-time highs above $60,000. The team over there at Sentiment wrote this: as you'd expect, not all of Bitcoin's whales are behaving in unison. However, we've seen interesting trends these past couple of months, such as 100 to 1,000 BTC addresses adding 353,000 more BTC since February 1st, while 1K to 10K addresses have shed 300K BTC. The chart that they provide shows that 1,000 Bitcoin to 10,000 Bitcoin addresses, so addresses with large balances, have been selling, but analysts from Whale Map said that this range is difficult to analyze, and that's because that range, addresses with that amount of Bitcoin, are typically exchange addresses, which are not tagged by most on-chain data gathering platforms. So ideally, it would be more accurate to compare the 100 Bitcoin to 1,000 Bitcoin and then the 10,000 plus Bitcoin holding addresses. So the Whale Map analysts say in the 1 to 10,000 Bitcoin band, there are a lot of exchanges. So this could be a part of it, as they are reducing the availability. Since these addresses could be exchanges, a better representation would be looking at 10K to and the 100 to 1,000 BTC addresses. Additionally, researchers at Glassnode found that during bull markets, old coins move more frequently. As long-time holders move to sell, it puts significant selling pressure on Bitcoin. However, in the current phase of the cycle, the frequency of old Bitcoin moving is much lower than 50%, or where BTC topped out in previous cycles. Glassnode researchers explained, they said this: in bull markets, old coins tend to move more. This increases the relative supply of younger coins in the network. At previous Bitcoin tops, around 50% of the Bitcoin supply was younger than 6 months. We are currently significantly below this level, currently at 36%. So, according to the analysis, the bull trend is intact as long as Bitcoin holds the support level above $55,000. Considering that big whales have been accumulating Bitcoin, as the cryptocurrency consolidates between 55,000 and 59,000, the bull trend remains intact despite the rising U.S. 10-year Treasury yields. All right. There you have it. Some analysis that would indicate the uptrend will continue. Let's jump into our word of the day. Word of the day is nascent, also sometimes pronounced nascent. Nascent or nascent. Nascent. It is a word that is used somewhat relatively within the cryptocurrency space. If it's not familiar to you, it means beginning to exist or develop. An example would be that nascent republic is holding its first election this month. People often talk about how the cryptocurrency market is a nascent market. It's in the early stages. It's the beginning days. It's just beginning to exist, to develop. Nascent. Nascent. It's one to have in your vocabulary tool chest. Let's take a look at the market. What is happening with cryptocurrency prices? The total market cap is 1.798, down a little bit. We saw a pullback in the market on Sunday, a little bit on Saturday, but most significantly on Sunday. However, if we look at the prices, you can see that is turning around. There's a lot of green across the board. So that's good. Bitcoin dominance remains the same. Gas prices for ETH are down just a little bit. Bitcoin is currently $57,621, up 2.3% in the last 24 hours. Same for the week. Ethereum is $1,793.57, up 1.23%. Not much movement there on the week at all. Pretty much just steady. Binance Coin is up 2.49% in the last 24 hours, 3.6% for the week. It is currently $266.37. Cardano is down just a bit, up 15.84% for the week, but currently at $1.18. That's down a lot from the recent highs that we saw when Cardano listed on Coinbase Pro, and then the regular Coinbase app the following day. But when it initially listed on the Coinbase Pro, we saw it jump to $1.84 for a moment, registering a new all-time high. So down quite a bit, pretty significantly. This actually looks like a really great buy opportunity for Cardano. I'm guessing, not predicting, but guessing we're going to see a pretty nice spike with Cardano here in the coming days, sometime this week. Polkadot is up 3% in the last 24 hours, now $37.45. XRP up 15% in the last 24 hours, up 30% on the week at 58 cents. Interesting. It's amazing how well Cardano does in spite of the constant negative news. There was another story today, and it seems like it's just on. I've said this so many times. I'm reticent to even mention it. But Jed and McCaleb, cashing out another 200 million XRP. Uniswap up 7.38%. Uniswap up 11.23% on the week. Uniswap's killing it, up currently $34. We'll see where that goes. One analyst was predicting as high as 50 in coming weeks. Litecoin, $196.56. Chainlink, pretty steady at $29.18. Theta. When I first introduced all of you to Theta weeks ago, it was $4 for something. Currently $10.16. Up 19.67 in the last 24 hours. Up 49, almost 50% on the week. Theta's just been killing it. And like I said yesterday, I think it was the day before, glad to see, good to see. I've been hoping one of these projects like Theta, one of these video streaming platforms, one of these decentralized YouTube platforms would just take off. And Theta is now at number 11. That's phenomenal. Super excited about that. All right, anything else just killing it in the top 20? We've got VeChain up 30% on the week at 9 cents, just a little over 9 cents. Crypto.com coin, the CRO, up 32%. They're moving off of the Ethereum platform and becoming a native token. So that's something to watch. We'll see what that does with the price. They've been doing some smart things over there. Obviously, it's a widely used platform. Very easy onboarding. A little bit lower fees generally than Coinbase. And they've got a bunch of products that people like to use for staking and some interest-bearing accounts and a debit card and credit card and that sort of thing. So definitely something to watch. Crypto.com at number 19. currently 22 cents. All right, Filecoin was up 50% on the week. Tron was up 31% for the week. Solana been rising in market cap, up 20% in the last 24 hours, $16.57. Avalanche up 15%. We've got a lot of good movement upward for the week. We did have that pullback on Sunday, which is pretty typical, not uncommon at all in any way. So one of the really, really great reasons to be in crypto, one of the potentially world-changing reasons, is the fact that it provides a safe haven for so many people around the world that are in countries in which their currency is just absolutely destroyed by mismanagement from their central banks. Typically, we see a lot of dramatic things happen where government of said country demands central bank to take activity, etc. There's a need to fund spending, and so they force or coerce or whatever it takes is done to get the central bank of that nation state to print more. And so they create inflation. Essentially, an invisible tax stripping the wealth, just eroding and just pulling wealth out of and away from the citizens of that nation. And we see that happening real time right now in Turkey. Bitcoin Google searches have jumped over 500% in Turkey as economic uncertainty looms. Turkey's population registers overwhelming interest in Bitcoin as it finds its lira, the currency of Turkey, in free fall against the dollar. Google searches for Bitcoin grew exponentially in Turkey following a sudden wave of economic uncertainty and volatility in the region. The news comes after Turkey's president, Erdogan, ousted the country's central bank head on March 22nd. According to data secured directly from Google Trends, interest in Bitcoin spiked over 500%. Around the same time, the lira nosedived 15%. The new central bank chief, appointed by Erdogan, is a known critic of high interest rates. Last month, he expressed disdain at the central bank's decision to hike interest rates, claiming it hurt the general public. The latest hike, announced March 18th, bumped interest rates by 200 basis points, bringing the figure to 19%. Even though the series of interest rate hikes have treated the lira well, Turkey's current president is a fellow critic. Erdogan stated that he is absolutely against high interest rates, believing that it causes inflation as recently as January 2021. Now that's pretty funny, actually, because that's the opposite of what happens. Oh, as Being Crypto also reports. However, if the past year has been any indication, the opposite is true. What's even more concerning is that the new central bank chief has echoed the same sentiment in recent weeks. Since November 2020, the central bank has raised interest rates from 10.25% to 19%. In the same time frame, the Turkish lira appreciated considerably against the US dollar. After collapsing to 8.49 against the US dollar, the lira recovered under the previous chief's reign to 6.94. So the previous chief was doing the right thing. Raised the interest rates. The lira starts to gain value relative to the dollar. And so the president, Erdogan, fires him, puts in a new head of the central bank, lower the interest rates, and cause inflation. So, because of this, the Turkish people are rushing into Bitcoin. The change in central bank leadership, however, has sent the lira tumbling, even as claims the I don't know how to pronounce his name, claims no immediate changes are planned. At the height of the investor panic, the dollar gained nearly 15% against the lira. Although Bitcoin has often been viewed as a hedge against bad monetary policy, that viewpoint has been legitimized even further of late. While gold has witnessed significant pullback since 2020, Bitcoin grew to a valuation of $1 trillion in 2021. Even as traders and investors pulled their funds from speculative and high-growth stocks, the cryptocurrency market has stayed strong. Crisis-hit nations are also some of the biggest adopters of cryptocurrency, with Venezuela trading millions worth of Bitcoin weekly. Data shows that there is still considerable demand for the cryptocurrency in the region, especially via peer-to-peer modes. So this is something that I want to talk about a little bit. Here in Turkey, the peer-to-peer exchange Paxful has reported an overwhelming increase in new user registrations over the past 12 months. Whether this is short-term trend or long-term migration away from the lira, however, remains to be seen. So the people of Turkey, obviously unable to use centralized exchanges because of KYC requirements and the like, restrictions placed on them by their government, are turning to Paxful, Paxful.com. For those of you who are on YouTube watching the video, you can see the site here. This is a peer-to-peer exchange where you can buy and sell digital currencies with other people easily. Another option, if you're looking for something similar, is Bisq. Talked about it before. This is one of the largest, fastest growing, easy to use, amazing peer-to-peer cryptocurrency exchange, essentially. Buy and sell Bitcoin for fiat or other cryptocurrencies privately and securely using Bisq's peer-to-peer network and open source desktop software. No registration required. So there's no KYC. There's no centralized. They do have a system of they use a 2 of 2 multi-sig wallet for the trades, for safe and secure trades. So rather than having some sort of centralized system that, you know, where the third party holds the asset, they use the multi-sig feature of Bitcoin to ensure that you receive payment before the Bitcoin is released. And you can trade all types of currency, cryptocurrency on here for fiat. So it's something to look into if you have an interest in that. Local Bitcoin, localbitcoins.com is another option if you want to check that out. You can buy and sell Bitcoin everywhere near you or around the globe. Trade Bitcoins person to person in an easy, fast, and secure way. All right. In the meantime, on these peer-to-peer platforms, while all this is happening in Turkey, Bitcoin hits $100,000 in Turkish peer-to-peer markets as the lira plummets. And often, these peer-to-peer exchanges actually give a better, truer price of what people are willing to pay. And you can get a better price if you're selling. If we click on markets on Bisq.com as an example, they will show recent trades. Bitcoin, 62,000. Traded at 62,000. We got USD, 57,184 on the last trade. So you can look at those for better information. All right. Cardano, Charles Hoskinson. Charles Hoskinson in a recent Ask Me Anything session, I think just got a little bit frustrated with all of the FUD that is being thrown out by Ethereum maximalists and others. He blasts Ethereum as a dumpster fire. So one of the original founders of Ethereum, Charles Hoskinson, and creator of Cardano, says Ethereum is a, quote, dumpster fire. Says Cardano will attract 1 billion users. Ethereum is a dumpster fire in which a few groups of elites have been benefiting, according to Hoskinson. The mathematician believes that Cardano is light years ahead of Ethereum with lower fees and faster transactions. He predicts that Cardano will be the first blockchain that hits 1 billion users. Hoskinson, who is the founder of Input Output Hong Kong, IOHK, came out swinging in a recent Periscope live stream. Hoskinson spared no punches, calling out the Ethereum community for its criticism of Cardano. Some in the Ethereum community have termed Cardano a, quote, ghost chain, claiming that it has shot up despite the lack of projects building on its blockchain. He said, there's been a huge amount of intellectual dishonesty, especially coming from the Ethereum maximalist or other actors in the space, about the nature of dApps on Cardano. Cardano is still in its infancy, and currently it's in a transition phase. This phase starts with metadata, then tokens, and lastly smart contracts. However, the network is being judged on the same level as Ethereum, which has had smart contracts for years. He says further, despite the fact that we don't have full programming ability at the base layer, already applications like shoe authentication on New Balance and cattle authentication with Beef Chain are using the metadata features of Cardano. Yet they say, what are the dApps running on Cardano? Hoskinson further blasted the narrative that Ethereum applications are being used in day-to-day cases. According to him, it's an ecosystem in which just a few are exploiting the millions with $100 transaction fees, yield farming, useless DeFi, NFTs selling for millions that are pointless and useless. There's no real substance that's sustainable or viable in the long term. This is fun to watch, actually. I'm still processing this. For the longest time, for the most part, Hoskinson has always stated that there's space for Ethereum, there's room for Cardano, for Polkadot, that the market will be big enough and they can tackle different problems. And he must have just gotten a little bit riled here with this and started to, started to speak up a little bit. Ethereum has the first mover advantage in the smart contracts and enterprise blockchain sector. However, this alone can't sustain the network in the long term, Hoskinson noted. In the past, first movers have fizzled out as better alternatives spring up. And he's right about that. That's something I talked about often, including Facebook, leading to the death of MySpace. You don't believe me? This is Hoskinson again saying, do something for me. Take out your BlackBerry phone, go to Yahoo on your Netscape browser and search for your MySpace profile. Tell me how that's working for you. This is how quickly things can change, and in crypto land, it moves fast. In the long term, Hoskinson believes that even the applications building on Ethereum will migrate to Cardano. These projects are out to find the most effective platform and will quickly realize Cardano works better than Ethereum, he stated. All this DeFi you see, Hoskinson said, is not loyal to its underlying infrastructure. And we've been seeing that absolutely as more and more DeFi platforms become chain agnostic and integrate other chains onto their platforms other than Ethereum. These businesses are not in the game to make Joe Lubin or Vitalik Buterin money. They are there to provide a service. If it's better, faster, and cheaper with higher liquidity and more users on our chain than another chain, then they'll migrate over out of self-interest. He further illustrates, no one woke up in the 2000s and said, I have to build on Windows because I like Bill Gates and Microsoft. They did it because that was the network effect and where everybody was at. So this made me chuckle, as you can see. This is going to be fun to watch. The platform wars rage on. We've got Ethereum currently still in the lead. Binance a contender as of today at number 2. However, we continue to see rug pulls happen on Binance, which, apparently isn't having any effect on the market because it's at number 3 currently. But there's issues with Binance. I'm not going to go into it now. We'll cover it over time. We've done some already. Number 3, we've got Cardano, and number 4, Polkadot right underneath that. And if you remove Tether, interestingly, boom, after Bitcoin, number 2, number 3, number 4, number 5. These platform coins just battling it out. Don't you love crypto? So much fun. It's going to be so much fun to watch, to see what happens here. And it's good. It's really good for the space. It fosters competition. And, they're not the only ones in the battle. I mean, if we scroll down through the rest of the top 20 or 30, we got other competitors. Terra Luna. We got, Tron and Cosmos and Solana and Avalanche and IOTA and EOS and, some old names and some new names. It's good. They're improving the technology. It's getting better and better and better. And each of these is attracting different user groups and different people from around the world in different countries. And it's a really good thing. It's good. It helps the space grow. Exciting to watch. All right, moving on to the last segment. Dun, dun, dun. Another one bites dust. The Wolf of Wall Street, Jordan Belfort, changes his stance on Bitcoin. He now expects Bitcoin to hit $100,000. Former Bitcoin critic Jordan Belfort, known as the Wolf of Wall Street, and the same name movie, believes Bitcoin can surge as high as $100,000 now. During his talk with Fortune, Belfort admitted that he had been wrong about Bitcoin when he forecast its collapse in a TV show back in 2017. Back then, the asset managed to approach the $20,000 level. The quote, Wolf was certain that Bitcoin would go decay under the pressure of regulators. It was an ideal way to launder money, he stated, which would prompt governments to ban it. However, Belfort's opinion is different now. When talking to Fortune, the ex-broker admitted that by now, Bitcoin has acquired a much greater amount of supporters, with many institutional buyers among them. He believes that, thanks to its advantages over stocks, with its limited emission, it is possible that Bitcoin may ultimately reach the $100,000 level. It's funny because I think a lot of people actually had that same sentiment that the Wolf had in 2017. And there was definite uncertainty what is going to happen. And it is interesting to note that that uncertainty was swept away largely for the reason he states. Yes, it is true that a lot of regulatory uncertainty was removed by actions of the governmental agencies, the SEC, the CFTC, etc., adding some clarity in a couple of different ways. One of the biggest ways was when the CFTC, or no, it's not the CFTC, it was another entity, which I'm blanking on currently, allowed for banks to be custodians of crypto. And then there were other things that were happening. There's a number of other things that have happened since 2017. But overall, it's the big institutions getting in. That create the certainty, or that remove the uncertainty about what the government will do. And what does that say? It basically says that when we see the big, institutionals investing in something, the government is not going to mess with it. They're not going to touch it. They're not going to regulate it out of existence. And that's sort of sad, but it's a reality. Now, they may, obviously those same institutionals are, it's because they have leverage. They can lobby the government, right? They can lobby the agencies. And there's a lot of collusion, or a lot of, I want to say corruption potentially even, where you have the same people that work for the big investment firms, the Wall Street firms, getting appointed to these regulatory agencies, right? And so it's good for everybody within the cryptocurrency space overall, because that fear of regulation or of crypto being illegalized, etc., has been removed. But they might have some tricks up their sleeve, such as trying to make it such that only accredited investors can trade crypto. And of course, that would be done for our protection. Anytime something's done for your protection, red flags should wave. Another route might be, sure, you can have crypto, but you have to hold it within a wallet, or you have to disclose your addresses so that everything can be tracked. I mean, there's a lot of things that could be done, and of course, it's going to be for our protection. It's going to be to stop money laundering. It's going to be to stop terrorist activity, etc., etc. Even though the evidence shows that the U.S. dollar is the number one currency used to finance terrorism and because, physical currency can provide a level of anonymity that is even greater than Bitcoin's, there will always be ways in which the criminal element will figure out how to circumvent any regulations or rules that are put in place. And the only thing these things do is they just they take our privacy away, and they make it harder for us to do business with each other. It quells innovation and stamps out progress often. But above all, it just removes privacy, which is important, because once you've lost privacy, you've lost the ability to have a voice, because you begin to fear that if you speak out against the powers that be, or against the state, or against the governments, that you might be demonetized, deplatformed, so there's a lot of other reasons. Not intending to go down that path and have a conversation about that at this moment, but just mentioning it. All right, so that covers the daily crypto update for March 22nd. I hope you all have a phenomenal day. It's always a great day to earn and stack more crypto. Appreciate you. Talk to you tomorrow.